Welcome to the Deep Dive. Today, we're diving deep into a fascinating player right at the crossroads of AI and marketing, ZETA Global Holdings Corp., ticker symbol ZETA. Our mission is to really understand how this company helps businesses navigate, the incredibly complex world of customer acquisition and retention. We want to pinpoint its unique strengths and ultimately sort of unravel why its current market valuation presents such an intriguing puzzle.
Yeah, it's definitely a compelling narrative. It perfectly illustrates this huge shift happening in digital marketing, where data and AI aren't just like buzzwords anymore. They're becoming absolutely central to a company's success. And there's a lot to dissect here, especially when we look at how the market's viewing its value compared to its peers.
Okay, let's unpack this then. Let's start at the very beginning. What core problem is Zeta Global actually solving for businesses?
Well, at its heart, Zia is an AI-powered marketing technology company. They basically empower large enterprises to find, grow, and keep customers much more efficiently. Their main thing is the Zeta Marketing Platform, or ZMP. It's designed to manage that whole customer journey from just one single integrated interface.
Okay, ZMP. So what are the actual pieces of this platform? Like, what can it do for a client day to day?
Right. So the ZMP unifies three key things: identity, intelligence, and activation. It starts with a customer data platform, a CDP, right? That's where clients pull in and unify all their different customer data. Then there's the identity and enrichment layer. This links the client's data to Zeta's own massive proprietary data cloud. It gives them a real 360-degree view of the customer.
A proprietary data cloud. We'll have to circle back to that.
Oh yeah, definitely. Then Zeta AI gets involved with AI-powered intelligence. It predicts consumer intent, generates personalized recommendations, that sort of thing. And finally, omnichannel activation puts it all into action, executing campaigns across email, SMS, social, connected TV, programmatic ads, you name it.
Wow, okay. That sounds incredibly comprehensive. So with a platform like that, how do they actually, make money? What's the business model?
It's primarily a SaaS model, software as a service.
Oh,
The bulk of their revenue comes from recurring fixed subscription fees for using the ZMP, usually through multi-year deals.
mm-hmm.
There's also a smaller but growing slice that's usage-based, so tied to things like email volume sent or the number of ad impressions served to the platform.
Got it. And who are they selling this to? Small businesses, or are they aiming higher?
They're really focused squarely on the big fish, large blue-chip enterprise clients. Think financial services, auto, telecom, retail, those kinds of players. They even have this fun internal metric, super walrus customers. Those are the ones generating over $1 million in annual recurring revenue, AR.
Super walrus. I like that. Okay, so they're hunting the biggest creatures in the sea.
Exactly.
All right, we understand what they do now. But, the MarTech space is crowded. What gives Zeta its edge? What's their secret sauce?
Yeah, good question. Their unique strength really lies in being data-driven, AI native, and having that fully integrated platform. First, and this is critical, is their proprietary data cloud. Zeta has one of the largest opt-in consumer data sets anywhere, like over 2.4 billion identity profiles. And these are enriched with trillions of behavioral and intent signals. This data is the fuel for their AI, allowing for much, much more accurate targeting and personalization than others can manage.
Trillions of signals.
Yeah.
Okay, and that proprietary data must be a huge advantage, especially now.
Absolutely. And that advantage is getting bigger because of the whole deprecation of third-party cookies thing. As those go away, having your own massive, clean first-party data set, that's gold. It's a real moat.
Right, so they're not just using client data, they're bringing their own massive pool to the party. And you mentioned integrated. How's that different from, say, Adobe or Salesforce?
That's the second key strength, the unified platform architecture. See, unlike competitors like Adobe and Salesforce, whose marketing clouds are often kind of a patchwork of different companies they acquired, Zeta's ZMP was built more organically, more ground up. The result is a platform that actually works together seamlessly. It helps marketers avoid that nightmare data silo problem you often get with the legacy suites.
Okay. Less duct tape holding things together.
Basically, yeah. It's just smoother, more efficient.
And the AI, lots of companies talk about AI. Is Zeta's genuinely core, or is it more of an add-on feature?
No, it's absolutely fundamental. Zeta AI isn't just sprinkled on top. It's woven through the entire platform. It's used for everything from building audiences and predicting who's likely to buy, to personalizing content on the fly and optimizing campaigns for better results. It drives tangible ROI.
Okay, driving ROI, that's key. So how do they actually stack up against the competition when it comes to proving those results?
Well, they often try to align their success directly with client KPIs. things like lowering customer acquisition costs or increasing lifetime value. They really position themselves as a strategic partner.
Hmm.
Competitively, they're mainly up against those big enterprise marketing clouds like Adobe and Salesforce. They usually compete by offering a better ROI and that more unified platform experience. They're also different from pure ad platforms like The Trade Desk, because ZETA offers that broader end-to-end solution for the whole customer lifecycle, not just the advertising piece.
And they stick to the big guys, right? Not chasing smaller businesses like MailChimp or HubSpot.
Exactly. Firmly focused on the enterprise segment. That's their playground.
Okay, that paints a really clear picture of their positioning. Let's shift gears a bit now and talk growth. What's Zeta's track record been like recently?
ZETA's shown consistently strong growth. They've been maintaining revenue growth rates well above 20% year over year for several years now. A lot of that is driven by their really effective land and expand strategy.
Ah, yes, the classic SaaS playbook, land and expand.
So what are the specific drivers behind that? It's kind of twofold. One, they're continuously adding new enterprise logos, especially those Super Walrus clients we talked about. And two, they have really strong net revenue retention, or NRR. It's typically been in the 110–115% range.
Wow, so existing customers are spending 10–15% more each year.
Exactly. It means they're adopting more of the platform's features, seeing the value, and expanding their usage. That's a huge driver. Plus, growth in high-margin areas like connected TV and email keeps giving them a nice tailwind.
Okay, so how did things look specifically in 2024, and what's the vibe for 2025?
2024 was a really standout year for them. Revenue grew about 23% year over year, which actually beat their initial guidance. They showed significant operating leverage, too. Adjusted EBITDA margins expanded into the high teens for the full year, and their GAAP net loss narrowed quite a bit. They also added a record number of those Super Walrus clients and saw more customers adopting their CDP and CTV solutions. Just solid execution.
Nice. And that momentum carried into this year, 2025.
It did, yeah. The first half of 2025 saw continued strong results. Revenue growth stayed robust in the 20–22% range, meeting or slightly beating expectations, even with some economic uncertainty out there. And those adjusted EBITDA margins kept climbing, which really shows the scalability of the business.
So what are they guiding for the full year 2025?
For the full year, they're projecting revenue growth around 19–21%. And they expect adjusted EBITDA margins to get close to or maybe even cross that 20% mark. Their strategic focus is still squarely on winning big enterprise deals, expanding internationally a bit more, and just continuing to innovate, especially in AI and CTV.
Okay, so strong execution, good growth, expanding margins, operating in a hot space. Which brings us to the really fascinating part, the valuation. Why, despite all this, does Zeta seem to trade at a discount? Let's get into this disconnect.
Right, this is where it gets interesting for investors. The whole investment thesis for ZETA hinges on whether they can keep up this premium growth while scaling towards actual GAAP profitability. The bull case points to those big trends: digital transformation, the move away from third-party cookies, which directly benefit ZETA's data-first platform. Plus, they have that competitive moat and the operating leverage we discussed. The bear case, acknowledges the tough competition, potential macro headwinds, data privacy rules changing, and just general execution risk. Can they keep delivering?
But the numbers are stark when you compare them. You mentioned peers earlier. How does Zeta stack up on valuation metrics versus, say, HubSpot or Braze as of, mid-2025?
Yeah, it's a striking difference. If you look at enterprise value to revenue, EV revenue, ZETA's trading at roughly 2.8 times its revenue.
2.8x, okay.
And HubSpot.
HubSpot's way up there, around 10.0x. And Braze is closer, but still higher at about 3.6x. So on a revenue basis, the market clearly values each dollar of Zeta's revenue less, a lot less, in HubSpot's case. Okay, huge difference on revenue. But you hinted earlier, if we look at cash flow.
Ah, yes. That's where the story really flips. On an enterprise value to free cash flow, multiple EV FCF's ZETA is around 27.6x.
27.6 FCF, and the others?
HubSpot is considerably higher at about 48.4x FCF, and Braze, dramatically higher, around 85.8x FCF.
Whoa, okay, wait. So for every dollar of actual free cash Zeta generates, you're paying way less than you would for HubSpot's or Braze's cash flow.
Precisely. That metric suggests ZETA is, let's say, much more attractively valued from a cash generation perspective.
So why? Why the disconnect? Why is the market seemingly overlooking this strong growth and, more importantly, the cash flow? What's holding the stock back?
Well, there are a few likely factors. First, while ZETA is very profitable on adjusted EBITDA and free cash flow, it has historically reported a net loss under GAAP accounting. A lot of that is due to high stock-based compensation, which is common for tech companies, but some investors just won't bite until they see sustained GAAP profitability. Black ink on the bottom line.
Right. The gap number is still what many traditional investors focus on.
Exactly. Second, there's market perception and scale. HubSpot is just a known entity, a behemoth in the CRM and marketing space. It commands a premium for its brand and size. Zeta, while growing fast and a leader in its specific niche, is maybe still seen by some as being in that show-me phase. They need to keep proving it quarter after quarter.
And maybe the story itself is complex.
That could be part of it too. Combining this huge proprietary data cloud with an advanced AI marketing platform. It's powerful, but it might be a complex story to communicate effectively to the broader market, potentially leading some investors to undervalue it.
So putting it all together, if you're bullish on Zeta, this valuation gap is actually the opportunity, isn't it?
That's exactly the bull argument. They'd say this gap represents a significant opportunity because of Zeta's superior cash flow generation profile compared to peers. Its consistent track record of 20% plus revenue growth, those rapidly expanding margins, and crucially, that durable competitive advantage from its proprietary data in a cookieless world.
And the catalyst for closing that gap.
Sustained quarterly GAAP profitability.
Mm-hmm.
That would likely be the key catalyst for a re-rating of the stock. And based on their trajectory, some analysts think that could happen maybe late 2025 or into early 2026.
Okay. So we've really taken a deep dive into Zeta Global today. We've uncovered how their AI platform and that huge data set give them a unique edge in MarTech. We've seen their impressive growth, the improving profitability in 2024 and 2025, and then spent time exploring this really intriguing question of why it trades at a discount.
Yeah, and given those powerful trends, digital transformation, the big shift to first-party data, AI becoming critical in marketing makes you wonder, how will the market's perception of companies like Zeta evolve? Especially if they keep executing like this and hit that GAAP profitability milestone. What stands out to you as the most compelling piece of their story, looking at everything we've discussed?
For me, it really is that valuation puzzle, the stark difference between the revenue multiple and the cash flow multiple. It just highlights how market perception can sometimes lag behind underlying business fundamentals, especially when you have things like GAAP versus non-GAAP metrics clouding the picture. Makes you think about what the trigger will be for the market to maybe see it differently. Definitely a lot to think about there. Thanks for joining us on this deep dive.